So much. Okay, thank you. Thank you all for being here. Good afternoon. My name is Soka Yus, and I'm a financial wellness counselor here with Mayo Employees Federal Credit Union. I've been with the credit union it'll be 3 years in June, so it's been a fun 3 years being here. But I've been in collections for 16 years, so it's financial wellness is a passion of mine, and we absolutely love talking to our members about, financial wellness and what they can do to improve, or, just use me as a sounding board to get through whatever financial situation that they're currently in. So today we're going to cover the topics of budgeting. So sometimes budgeting may have a negative image on it, people think budgeting is like a restriction, but honestly, if you look at it as more like a freedom, because you know exactly, how much you can spend and how much you can put towards bills or, your future financial goals. We're also going to talk about savings, managing debt, retirement financial planning, managing your money, and watching out for scams. So Stephanie just got done talking about frauds and scams, so we'll just touch just a really short couple of slides on that, and then of course if you have any questions about that, we can always go further into it. So first things first, budgeting. So it's always, you should establish and understand your credit, make all payments on time, and start building savings. So we'll go further into that. So building healthy habits with budgeting. As I said before, budgeting should be looked at as a freedom of what where your money is going to versus a restriction of how much, like a cap of what you need to spend on. So for example, the best, if you think that you're eating out too much, and your eating out budget is, or right now if you think your budget is at $300 of eating out and you're spending about $500 on groceries, but you're not even sure if that is what you're spending each month, then let's review your budget, what you're spending each month, and see if you enjoy eating out more than cooking. Let's just go ahead and have an eating out budget versus, a larger grocery budget for that. And we can always be flexible. So budget is one of those things, it's a suggestion to help you work towards your financial goal. But if it's something that's really not working for you for this month budget, let's go ahead and reevaluate that budget and set a new one for next month and see which one works better for you. So it's not a way to restrict your lifestyle, it's a way to go ahead and improve your financial control. So, and we can also talk about, so the best thing to do when understanding budget is to go ahead and take a look at your credit also. So credit is part of your is part of budgeting. So if you take a look at your credit report and you have debt on there, then we want to go ahead and budget the debt repayment program as well.
Does anybody have an 850 credit rating, or is that impossible to achieve?
Oh, I'm sure it's possible. I'm sure someone out there has it. So it's always a goal to hit that, And one of the things that is counted towards your credit score is your length of credit history. So if you have someone that started really young, it's always just done the right thing with their credit, has revolving credit line, and has multiple lines of credit, have a diverse credit report, then it's fairly easy to hit that, the higher closer. Oh, it could very well be.
I'm like 820.
Okay, yeah.
Never have I been able to hit 850.
Okay, yeah.
Never miss a payment.
Oh, goodness.
So maybe it's not diverse enough.
We could be, but it's something that we can review together as well, so we can schedule an appointment and review that together. So yeah, absolutely. And then the next thing you want to do is you want to make all your payments on time. So go ahead and create that habit early on, especially with kids. If you have, teenagers that are just getting their first job, if they, are getting a bill, let's say have them pay their car insurance or their cell phone, just create that habit of paying their bills on time, and then start building your savings. So obviously we understand to have an emergency savings, we understand the importance behind that, because if you don't have an emergency savings, if of course an emergency comes up, you don't have access to that cash, and then you might end up getting a loan or getting putting that emergency on a credit card, and then you're building your debt. So we want to have an emergency stash. So we can, and that's all part of budgeting. So you can always budget your emergency savings as part of where that money goes to.
Is that 6 months, that emergency savings?
Preferably, yeah, preferably 6 to 9 months these days. I know a few years ago they said it's good to have emergency savings that will carry you for about 3 months. But nowadays, with how fast inflation is growing and everything, we might, our goal is always do 6 to 9 months as a goal for emergency savings. Okay, and then set your financial goals. So financial goals can include your short-term and long-term goals. So some of your short-term goals could be we want to put emergency savings as part of your short-term goals. If you want to save, let's say $1,000 within the next 3 months, we need to know how much we want to put away towards savings right away. And then long-term goals would be something like a down payment for a house or pay off your student loans. So that's part of your long-term goals as well. Okay. Did you have a question on that? I thought you, okay. And then setting a budget and keeping track of your spending and daily expenses. So it's really important how fast money moves these days that you review your daily spending. So with MEFQ here, we kind of, you can track your spending on our app or on the website. Or if you have any questions, you can always call in and we can, walk you through your charges and stuff. It's really important that you know where your money is going, because if you are able to budget yourself, let's say, I really want to save for a down payment on a house, I need to save this much. So I need to spend no more than $50 a day on whatever. So if you are able to go ahead and keep a budget, keep track of what you spend that day, whether you go over or under that budget, you can readjust it for the next day. So it's really important that you keep track of your spending. And and habits is one of those things where if you do it consistently for a long time, it becomes a habit. Then it's a lot easier for it to become a habit. So the sooner you start, the sooner you share your financial goals with someone you trust, they can kind of keep track of you of that. Because I personally work with people that have long-term goals and short-term goals, and sometimes they just need someone to kind of follow up with them and say, how are you doing with your grocery budget this month? Did you go over, or we need to readjust it? So it's one of those things where if you have like a budgeting buddy, that might be helpful as well. But if not, then we can be your budgeting buddies. All right, the next one is to start and continue building emergency savings. As we touched about this a little bit ago, the importance of having emergency savings, and how it can be really easy to start doing that. So there are some employers that allows you to do automated savings directly from that payroll, and then pay a certain percentage or amount from that payroll to a different savings account. So if you bank with Bank A or Credit Union A, and that's where all of your charges and expenses, your daily spending is going through, perhaps have a different checking account or a different savings account with that same institution or with a different institution that will make it harder for you to get a hold of or have access to. That way you have, it's easier for you to save your emergency savings that way. So it was work for some people, and for some people they just need to not see that amount in a checking account, so it's easier for them to not spend. So where do you even start to budget? So first things first, we need to know, part of budgeting is knowing where all your money is going to currently. So that would include auditing your own account now. So if you're not familiar with pulling up your own, your bank statements online, we can go through that together. And we can kind of audit and see if you think you're spending $300 a month on groceries, but after we audit your account, go through where you're spending at Hy-Vee, where you're spending at Walmart and Target and things like that. And then you realize you're actually spending $800 a month on groceries, when that just blew your, your budget fund for groceries. So we need to address that and adjust it accordingly. So the goal to have a budget is not to put a restriction on your lifestyle or your life. We want you to have the freedom to know exactly what you have to spend and what category and how important each category is, so we know how to move forward. So once you audit your account, you can just go ahead and put in a spreadsheet. It can be this spreadsheet that I can share with you with, it's from the credit union, or you can just do your own spreadsheet, whatever. Some people just write it on, a notebook, a piece of paper, where there's plenty of apps that you can keep track of so there's plenty of apps. And then you want to go ahead and put down your income. So we want to know how much is coming in, okay? Now your income is actually your take-home pay. So this is after, everything. This is after where all your insurance is already taken out, your FSA, your whatever it is, your retirement is already taken out from your paycheck. But this is money that's hitting your account directly. So for example, we have Jane and John Smith here, a total $5,600 of income, total income take-home pay. And then we want to go ahead and do what bills they're paying. So what are your current bills right now? You write down every bill that you can think of. That includes your streaming services, your kids' activity for every 3 months you pay $90 for dance or whatever the situation is. Then in that case, if it's like every 3 month charge, then you would just break it up over each month, and then you would just break it down and put like $30 for that budget. And what I like to do is I like to go ahead and set it up according to due dates. So if the first, if your mortgage or rent is due on the 1st, and that's the most important thing, let's go ahead and put that on top. So we know for sure out of $5,600 a month, you're gonna spend $1,400 on mortgage or rents, okay? That's even kind of low for rents and mortgage these days. But so we wanna write out what you're paying for student loans, but right now since student loans are on forbearance, a lot of people don't know what they're gonna be paying back. Well, what was the amount you paid before? So let's just kind of budget into that because we don't know, if it's going to start up in June or July again. So I want to start budgeting into that. So for now, even though it is in the budget and you're not paying student loans, you can go ahead and move that $250 of potential student loan payment to a savings account strictly for student loans. And then your cell phone payment, car insurance, car payments, electricity, credit cards, whatever it is you may have that you're paying each month. So these are fixed accounts each month, okay? Fixed expenses, excuse me. And then you're gonna look into variable expenses. And those things are kind of like groceries or household items. So a lot of times when you go to Target, people do a Target run and you go in there for one thing, but you come out with 50 things. That happens all the time. So then you realize, you know what, I don't know how much I actually spent on groceries in that run. So out of that $100 I just spent, maybe I only spent $40 on groceries and then $60 on goodies and things like that. So we want to go ahead and have, miscellaneous category as well. So for example, we can do groceries for $50 out of that Target run, and then the other $50 if you have, if you need to buy, birthday gifts or wedding gifts because it's wedding season or wedding gifts like that, you can actually categorize it and then know how much you have to spend out of that category. So that way you can still be on track with your grocery budget and still be on track to pay all of your bills, that's due, okay? And we can even break it down per paycheck. So for example, if your paycheck if you're getting paid on the 15th and 30th of each, or the last day of each month, you can say that the bills that are due from the 1st to the 15th will be in the first column, and then the second column will be any bills from the 17th to the 28th. So you know exactly how much is left over for groceries and goodies and things like that, okay? And then don't forget and then we can also talk about the savings category. So a lot of times when I meet with members, we want to have a Christmas savings category. We want to have new tires category if they're traveling far, because that can be very expensive. And if you don't prepare for something like that, then it's gonna go right on your credit, your credit card if you're not prepared to have that as a savings category. So things like family vacations or car insurance deductible, medical deductible is something that people don't really think about either. So with Mayo, they can have like FSA or HSA they can use towards a medical deductible, and then the insurance will take care of the rest of it, or 80-20, whatever your plan will be. But a lot of times people don't really save or have enough in savings to pay for that out-of-pocket max deductible. So that's really important to remember too. So it's those kind of little savings that a lot of people don't really think about, but we need to prepare for it as well, okay? And so on to the next slide. So we talked about create a list of your monthly expenses, what's left over for savings, list your savings goals as we see down there. Automate savings. So automate savings, the first option, like I said before, you can have it directly come out of your payroll and have it deposit into a separate savings account in a different institution, or just, or you can automate it where they deposit it into your checking account, like 100% of your paycheck into our checking account here, and then you can have it automatically, say $100 a month, go to a separate savings account within our within the credit union as well. So it's always the best way to go. Budgeting ideas to reduce your expenses. So It's great that, you know, some people do have the extra time to go out, take up extra work, do consulting work on the side to get extra income, but a lot of people don't have time for that. So we want to look into ways and how we can reduce expenses, okay? So change your cell phone plans and provider. There's always going to be advertisement out there. They're always, you know, challenging each other to see who's going to have the cheaper one, the cheaper phone plan, the cheaper phone. So you can get on your family's phone plan, you know, together, or I think Spectrum is running like a really good special. But then again, if Spectrum has a good special this month, T-Mobile's going to have a good special next month too. So it's up to you to see what's better fit your budget. But it's always important though to try to shop for those new things once your contract is up if you have a contract with them. Another thing that I like to tell people to shop for is car insurance. Okay, so your car insurance, I've been with State Farm since I was 15. They've been good to me, but every couple of years I shop for a new car insurance, okay, just to see what they can offer as, you know, because my life has changed. You can be married, you have a house, and those things are little discounts that they give you. You know, it's age, if you get a little bit older, you get a little bit discount. You know, driving, like accidents have fallen off your record, you can always shop for a different car insurance company to see if they can give you a better offer. But just to let you know, one of the main things they check for to be able to determine your premium is your credit report. So they do check your credit report as part of them determining your premium. So just kind of know that going into that, okay? Another thing to look for is cancel gym memberships. Realistically, I know I have a gym membership and I keep telling myself I'm going to go, but you know what? Sometimes a good show on a couch sounds better at the end of the day, you know? So, I know the rack is kind of expensive. Some people go to Planet Fitness for $10, $20 a month. They're like, you know what? $10 a month, that's nothing. I can just go when I feel like I'm going to go. I feel like I'm not going to waste any money with $10 a month. But you know what? You know, after taxes, it's $11, $12. Take that multiplied by a year, for 12 months. So you're wasting money when you can put that extra money, whether it's $10, $12, into a different category of your budget, okay? So we can try to look within ourselves and see if we're being realistic with with this. But also cut streaming services or consider different internet providers or cable providers, landline providers. I know with Spectrum, going back to Spectrum again, they always tell you, you know, you can get a better deal if you get a landline with this along with your internet and cable. And a lot of times people don't really have landlines anymore, but they kind of just get it because it was on a special. So for 3 months, you pay $120 for all 3 services, and then life happens, and then you forget to cancel. And then on the 4th month, it goes up to $150, and then on the next month, it goes up to $160. You know how it climbs until you realize, my goodness, I can't keep up with these. And why did it jump from like 120 to 220 within like a few months? Well, that's because the promotion is done, and you need to review that again and try to, you know, get on a different plan, or just cut the landline out together if that's something you don't need. So with internet service provider, I know that's a little bit more, you know, if you live out of town, then there may be only one company that provide that one, you know, that provide internet services. So sometimes you don't really get to negotiate too much, but if you're in areas like Rochester, there's a few that are competing for your business. But streaming services, my goodness, when I work with people and they think that they're spending $20, $30 on streaming services, and then when we start to list out you know, the streaming service is what you're paid for, it comes out to almost $200 a month. You're getting the ESPN Plus, you're getting the Disney Plus, the Netflix, you know, you get the old school, like the Netflix, the Hulu. There's so many different streaming services that are $5, $6 a month, right? But then that could be a promotional amount, or they $5, $6 for 8 or 9 different, you know, streaming services adds up so quickly. So that's something you want to be wary of. So when you are auditing your accounts, or you're auditing your, you know, own bank statements to see where all your money is going to each month, that's something for you to write down too. So those $5, $6 do add up. So we want to go ahead and take a look at that and just write it down too. So just be, you know, mindful of that. Move out a checking account or savings account with monthly fees or minimum balance requirements. So there are some banks that said, you know, you have to, the minimum requirement is for you to do a direct deposit of $600 a month. Otherwise, we charge you $15 banking fee or checking fee or savings fee. Or, you know, you have to have a savings account with us, or we'll charge you $10 monthly fee for your checking account because you don't have an extra account with us. there's no need for you to pay a bank to put your money in there and for you to to use that bank as a main source. So it's always best to go ahead and shop around for banks as well. So banks and credit unions. Refinance loans to a lower interest rate. So our interest rates with different loans and stuff is a little bit higher than it used to than a few years ago. However, they are kind of it is where it's at right now. We're one of the bigger competitors as well. So we have a lot of good loan rates that's going on with us right now too. So that's something for you to always look into. So for example, if you bought a vehicle a couple years ago and your interest rate was for whatever reason 21%, and your credit's at a better standing at this point, then you want to come in and talk to one of our loan officers and see if you can get a loan with a much lower rate, okay? But if your mortgage is already, if you bought your home in 2020, 2021, your mortgage rate was at 2.5%, and the mortgage rate now is closer to 7 or 6 or 7, there's really you might want to, you can still come in and talk to our loan officers and see if that's something you can refinance, but it's something for you to kind of be mindful of as well. So tailor your goals to your lifestyle. Like I said, you don't have to cut out the coffee, the Starbucks every day. Just add it towards your eating out budget. We don't want you to cut, your lifestyle and, short and stuff. We want you to enjoy life and enjoy your money, but we want you to have control where your money is going to, so you feel that freedom to be able to spend your money. Before I move on, do we have any questions online? Okay, go ahead.
Just a comment.
Thank you.
One of the things that I've noticed, and Steph just brought it up here again, that has been really helpful is if you really like those streaming services, maybe you have 2 or 3 that have a lot of shows that you like to follow, rotate them monthly.
Oh.
I started, like Seth started like, okay, this month we're going to have Netflix, and this month we're going to have Hulu, and then we're going to switch to Disney Plus. So we're only paying for one at a time.
Yeah.
And then we just focus our attention on watching the shows that we want for that service, for that time frame, and then rotate. So we're not paying for multiple at one time.
That is a great idea, Stephanie.
What's the cheapest one of those?
$4 a month.
Oh.
It's NBC.
That is only $4 a month.
Yeah, I pay $4.99.
Okay, good to know. I didn't even know that.
NBC, Peacock is older NBC shows. So it's not current. But I think the NBC app is free, and you get all the current shows for free as long as you watched the episode that came out within a week.
Okay.
So they
Nice.
rotate, they rotate through weekly, but yeah, it's nice with streaming services
Yeah.
because there's no cancellation fee unlike cable.
Yeah.
Like traditional cable, if you canceled early, they might charge you the half of what you may have owed or whatever you spent.
Yeah.
Until streaming services start charging for cancellation fees, there's no reason not to rotate one a month.
That's a great idea, guys. Thank you.
I have Spectrum, I bundle it with other things, and I do very little texting. So I only need 1 gig of data a month,
Okay.
and Spectrum will charge you $14 a month for your cell phone.
Wow.
And then if you go over that 1 gig of data, they'll
Yeah.
just charge you another
Oh.
$14, but it
Gosh.
has to be bundled with your.
With everything else.
But just FYI for anybody that doesn't text them.
Sure.
Via
Yeah.
budget save on a cell phone.
Sure, yeah. That brings up a good idea where if you have Prime, for Amazon, for Prime, I always do the promotional amount, like $199, and then I go on a spending spree for like 7 days or something. Buy whatever I need, cancel it, and then it's the next month if I need to buy something else, and I have to. That's a way for me to kind of put a cap on what I can spend on Amazon as well. Just online spending, it's so much easier. I just came out from maternity leave, and when I was holding the baby, all I can do was, shop online. So I found that if I just put a cap on what I can spend on certain days and stuff, then, that's a way for you to have your budget as well. Because, and then also, I have some friends that use, you can order your groceries on like Hy-Vee aisle, or just order your groceries or whatever you need from Target or Walmart. That's a good way for you to kind of, keep your budget, keep your shopping budget under what you need to come under also, I mean, what your budget needs to be, simply because it's a lot easier for you to see your price. I notice when people are just out shopping, even though they have a list, it's hard to keep up with that list, you know, what you need, because you see things that are enticing and you want to throw things in there and you're like, oh, this is a great sale, I want to go ahead and take advantage of this sale. The next thing you know, your grocery budget is, you know, out the window for that week. But if you shop online and you put your item in the cart, you can see exactly how much it comes down to with taxes and how much your cart is adding up to. So it's an easier way for you to kind of keep that budget under as well. And then you're not enticed by all the sales, all the, you know, smell and the sound of the promotions in Target and stuff like that. They're really good at marketing what they do. They're really good at getting people to buy what you don't need. So,
One more question.
Yeah, of course.
Open up to everybody.
Sure, yeah.
And knock on wood, I haven't had a car accident.
Sure, yeah.
And so I think, why should I keep paying collision? I buy new cars and I hold them for 10 to 15 years, a brand new car.
Sure.
That long.
Yeah.
And I've practiced this thing of dropping collision after about 7 years, about that.
Sure, yeah.
Any thoughts on that? I'm taking a risk.
Yeah.
But your car depreciates so much anyway.
Right.
You know, it's like,
You can always, yeah.
you know, it's like, if I pay collision on a 10-year-old car when it's,
Yeah.
any thoughts on that?
Yeah, what I like to tell members also when they are shopping for new car insurance, you know, prices and things like that. So determine the year, the value of your vehicle, and how comfortable are you, you know, dropping that collision. So for example, you can drop collision for spring, summer, and fall, but when winter comes around, you can add collision back on too. But then be mindful that, you know, you get that prorate amount as well. So that first payment after you add collision on might be larger than the rest of your payment, so don't be surprised with that. And also, you know, if you just drop down sometimes people are just don't really drive anywhere, and they work from home, they do all their shopping online, they have people bring groceries to them, they don't really drive anywhere. So look into dropping your coverage also, just to state minimum if you're comfortable with that. But it's always, you know, suggest that of course you have to have insurance on your vehicle. But if you're comfortable with dropping collision after 6-7 years, by all means do so, because, you know, the state doesn't require to have collision. But also just be mindful that, you know, during the winter time, you know, you might want to add that back on, or just something to consider as well. Yeah. Absolutely. So on to the next one, back to savings again. Savings is really important as part of your budgeting, and especially emergency savings. So you want to set goals. So part of setting goals on something is you want to have a set amount, and you want to have a set date when you want to reach that goal. Otherwise, if you say, you know what, I want to save $1,000. Well, you know, do you want to save it within a year, 2 years? You want to save it within 3 months. If you want to save $1,000 within 5 months, then you know that you have to put $200 away per month, or $100 from each paycheck if you get paid twice a month. So that's easier for us to break down how much you need to save each paycheck or each month. So it's really important to not only just to have what category you want to save things on, you know, but you want to have a set date as to when you want to reach that goal, okay? So for example, and then also emergency savings includes, like if you need to pay for rent, mortgage, you know, for the next 6-9 months. I know that's going to be a large number. It's going to be a large number, and it might be intimidating at first. But if you know that you need to save, let's say $25,000 to cover you for 6 months, let's go ahead and break that down. Let's take that $25,000 and say, I want to save that within a year and a half, okay? So within a year and a half, I know I have to set a certain amount to the side per paycheck, per month, and per quarter, just to see where you're sitting at, and so that way you know exactly what to save for. So we know by the next year, by April of 2024, you have $20,000 saved, okay? So let's say if you want to buy your house, you want to buy a house next year, and you don't have any money for a down payment, and you don't have any money in emergency savings, which one is more important? You have to learn to prioritize which savings to go for. We always want to go ahead and prioritize emergency savings, because that covers your living expenses, your groceries, car note, you know, car insurance, like that, just in case something happens, you know, for God forbid, whatever situation happens. You know, you just never know these days. So we want to prioritize emergency savings as the top of the list, okay? And then when we talk about short-term savings, again, that's, you know, your emergency savings can fall into short-term savings because we don't want it to be a long-term thing. Let's say you want to buy a house in 2025, you don't have anything in down payment right now, but you know that you want to do, let's say if you want to do the traditional 20% down and you need to save about $40,000. In the next 24 months, we need to know how much you need to save. So part of doing a budget that we did in a couple slides ago, we know exactly how much you can save and when you can use that as a down payment, okay? And car payments as well. So also car payments, so when you buy a vehicle, just know that it's more or less considered bad debt because your vehicle is depreciating. You're paying an interest on this loan. So if you know that you want to do $2,000 down on a car loan, you need to know how much you need to save every 2 months or every month towards that down payment, okay? But another suggestion also is if you think that right now you don't have a car note, but you want to eventually, let's say in 6 months, you know that you need to get a new vehicle in 6 months when winter starts up again, things like that. And you say, you know what, I want to get a vehicle at about $40,000, so that may be looking about, well, I mean, I think that's normal these days, you know, 40,000. So yeah, I know it sounds like a lot, but but let's say if the vehicle is $40,000 after all the taxes, you know, title and registration comes out to $40,000, that's the loan amount that you're gonna, you know, get. Let's say the monthly payments come out to about $600 a month. You're like, well, you know what, I don't know if I can do $600 a month in 6 months. Well, why don't you start saving that now, as in, you start automating your $300 every paycheck or $600 a month into a specific account. And let's just pretend that's your car payments, okay? So if you're able to keep up and have that $600 put in your that specific account each month, then at least, and you're comfortable with the rest of your budget, then at least you know in 6 months, then you're comfortable with this $600 car payment as well. But another thing to consider when you're getting a vehicle also is the car insurance goes up, you know, the value and stuff. So if you're buying a newer vehicle, of course your car insurance goes up. So it might be a good time to call your insurance people and try to get a quote to see how much your car insurance will be for that VIN for that vehicle, or you know when if you need to, if you have like a multi-line discount, if you're renting, then you can add renter's insurance and stuff like that too for a discount. So that's something to consider. So something to add into your budget is your possible car insurance costs, okay? Long-term savings, determine amount and set goals for some things, for like house down payment, investment, and retirement. It's never too early to start saving for, you know, retirement and start investing. But so we have a great team here that can talk to you about investing in retirement as well. So if you have more questions about that, you can reach out to us and we can get you set up with someone to talk to you about that. But as far as house down payment, that's a lot of times people have a hard time saving for that. So that's considered a long-term goal, and that's something we can definitely work together to set up a budget and to see how much you need to save each month or each paycheck to get towards that goal. So we have to determine what amount that would be, or roughly an amount, and see where your credit is at, you know, currently, and work towards cleaning up your credit as well. Do we have any questions on this before we move on? No? Okay, perfect. So savings, idea to accumulate more savings. So obviously we want to set goals. Could be financial habitual. So the more you do things, whether it's automatically, you know, set up, have it transfer automatically from your checking account to a savings account, that might be the easier way. Or it could be, it could be your financial goals, or sorry, your financial habitual goals. So it depends if you want to, let's say, stop smoking, whatever the situation. You start with small, you know, small goals and small changes first, kind of like financial goals as well. So we start with something smaller. Automate your savings, that'll be the easiest way. And obviously meal plan and eating out less, but my goodness, like the prices of eating out has gone up so dramatically. I mean, I understand that, you know, with inflation, everything is getting more expensive. So what if you, if you eat out every day for lunch, let's just go ahead and see how much you can save if you only eat out 2 days out of the week for work, or a meal plan. So sometimes meal plan with a busy family might be a little bit harder, but you can you don't have to meal prep or meal plan for the entire week, but just meal plan for the next 2 or 3 days just to see, because a lot of times if I meal prep something, a meal plan something for the week, by Wednesday I may not be in the mood for eating salmon or something. I may just want something completely different, if it's steak or something. So for me, what works best for me when I meal plan is every 2 to 3 days. So you might do that. Some people do it for the entire month, kind of like a school cafeteria where they have, what they're going to eat for that day. If that works for your family, that's wonderful. If not, then try to 2-3 days. So the goal here is to do it little at a time, just do small changes so you can reach your bigger goal, okay? And carpool or avoid extra trips. So if you live in, if you work here in Rochester, like I do, but I live out of town, 30 minutes out of town, on the way in, I see, phone numbers that you can call for carpooling and stuff like that. Or your coworker, you can ask your coworker, that lives in the same town if you want to ride together and just split that cost. And then it's less wear and tear on your vehicle too, and you don't have to change your tires and change your oil as often as you would if you use your own vehicle every day, okay? You sell items you no longer use or need. These are like clothing or baby gear, household items. Like I said, I just came out from maternity leave, so a lot of our baby stuff, we got this expensive little swinger for like $250. He doesn't even like that. So
On Facebook Marketplace?
oh no, but we bought it new. We got it for a baby shower because it was something we think babies will love. Like we thought he was going to love it, but it turns out he doesn't. We ended up going to Once Upon a Child and bought this swing for $20, and that's what he loves more than anything. I was like, what the? And then he doesn't sleep in his regular crib. He doesn't like to sleep in his crib, but he sleeps in this bassinet. So it's just a matter of, so we try to get rid of the things he doesn't like and just sell it that way. Just try to get rid of the clutter and the, just to make some extra money back. And also clothing per season. So it's always good to change, fashion changes so quickly these days, but when you sell your clothing and stuff, your lightly used clothing, you're helping someone else to, enjoy that too. So, and household items, blenders, if you have, one of those KitchenAid blenders and you got it as a gift 5-6 years ago and you've never baked since then, let's just go ahead and sell that. You can get about $200-300 for that. So, yeah. So add another gig or part-time job if that's something that's available, or that's something that's possible for you. With a busy family, traveling back and forth, or simply if you feel like you don't have enough energy just to work an extra job, or it's more of a gig economy where you download DoorDash and you could deliver for DoorDash or something. If you feel like that's something you don't want to do, then figure out more ways where you can cut your expenses, more ways where you can save things, okay? But that's always available for you as well. So it doesn't always have to be DoorDash. It doesn't always have to be Uber Drive. There's so many other gigs in this gig economy that you can look into, okay? And ways to save services and accounts. So you can always put in a high yield savings account. So we have that in with the credit union as well. So for example, if you have 20, 30,000 or above up, and it's just sitting in your regular savings account, let's just come in, talk to a member service representative, or call us over the phone and see what we can do to transfer your money and open a high yield savings account, so you get more of your interest rate return on that interest rate. Okay, so even though it's just going to sit there, you're not going to touch it. It's going to go towards a long-term goal like a down payment on a house. We still want that money to kind of work for you as well. So we don't want to just sit there and collect, little interest rate. So we have CDs and certificates, youth and teen certificates. You can put towards education. So you can, for example, a way that you can use money towards your education if you want to get like, let's say a certificate of some sort, and you can use that money towards your, investing in yourself, so you can make more money in the long run after you get your certificate. We can talk about traditional and Roth IRAs. Like I said, we have a great investment team here, and also MSR that we can talk to. Pre-tax savings and pensions. And next thing is the fun topic people always love to talk about, is managing debt. Your credit profile is specific to you. Know how credit score is calculated. So it's always kind of, it's kind of a mystery for a lot of people for a while how credit scores are calculated. They give you an idea. They give you a percentage on 35% goes, of your credit score is from your, your credit history, or the length of your credit goes towards 35% of your score. But, I mean, is it really 35%? I mean, they kind of give you a table, which we kind of follow, but it's kind of, but it's kind of a mystery still to a lot of people. So we can talk more about your credit profile. The most important thing is, when it comes to credit managing your debt, is know exactly what's on your credit report. And know how, when you want to pay that debt off, okay, when you have a timeline to pay that off. And so you want to make thoughtful and deliberate choices. You want to be mindful. You want to know, you want to have control of your debt. So having a budget means having control of your money. And then once you know exactly where your debt is at, then you know that you have control over your debt. You can be deliberate with your choices to see which one you want to pay off first. For example, you have 2 credit cards. You have one that is at 6% interest rate, and the other one is at 21%. The deliberate choice is, let's go ahead and work towards paying that 21% off first, because that accumulates a lot faster, okay? Monitor your credit report at least once a year. You can go to annualcreditreport.com or call the phone number. It's completely free. You don't get your credit score on that. I don't recommend people paying to get their credit score. A lot of times it's a different model that the institution doesn't use. So for example, if you are trying to apply for a car loan, we use a different model for that, but let's say Credit Karma gives you a credit score for a different model, and it's completely different. So with Credit Karma, let's say if your credit score is at 720 and you're applying for a mortgage or car loan with a bank or with a credit union, and we use a different model for that specific loan, then your credit score might be at like 680, 670. So it's always best that you just, if you want to know how much you might qualify for loan payments, it's always best to talk to a loan officer about that and see exactly how much you might qualify for. But it's always good to review your credit report. So if anyone's interested in reviewing your credit report, if you're having a hard time understanding it, or if you're just like some people get anxiety just looking at your credit report, the idea of logging on and just looking at what might be in there that you might be scared of, then you can always reach out to us and we can schedule an appointment and we can review it together. If there are fraud and discrepancies on there, we can always dispute it together. So it's more important that you know exactly where your debt is at, if the things on there are accurate and there's no fraudulent activities or anything on there, okay? So this is the kind of the table of how the mixture of how your credit score is kind of determined. So 35% payment history, 30% amounts owed. So you kind of want to stay under a certain amount of, so I forgot the technical word for it, but the amount owed. So for example, if you have a $10,000 credit score and you stay under a certain threshold, like under 30% of that, 30% of, credit utilization, that's what it is. So you want to stay under about 20% of credit utilization to kind of maximize your credit score. Your credit score, obviously it changes, it's always going to change. 10% new credit, 15% length of credit history. So if you've had credit since you were 18, you're currently 40, 50 now, it's in good standing, that goes towards your good credit score as well. 10% is that credit mix there that you were talking about earlier. But the most important thing is credit history. So payments on time, what has been missed, and if there's discrepancies, let's say if you make a payment to a credit card 3 months ago and you could have sworn that it was paid on time, but they're reporting as 30 days delinquent. When you're checking your credit report, you can see that that's affected your credit score. It's gone down. You can always call that company to dispute or to talk to them about it and see if they can update that for you if you have proof that you paid it on time. And that's the importance of kind of looking at your credit history as well, or your credit reports, okay?
If you're checking car insurance or
Yeah.
home insurance, then, will they ding the credit score?
Oh, that's a good question. So I think what you're asking, if it's going to be a hard inquiry or a soft inquiry.
Correct.
So a hard inquiry is like if you're applying for a credit card, they check your credit score, that's considered a hard inquiry, so it might ding your credit score, your credit report. But I believe with car insurance, it's not considered as a hard inquiry, but it's something for you to verify with the company as well, whatever company you're going through, just to verify that as well. Or you can just kind of get like a ballpark estimate with car insurance without them running your credit report. So if you're buying a new vehicle, you have the VIN number. You don't want them to completely you don't want them to run your credit report just yet, but you kind of want to get an estimate on how much that payment will be. So you can request that from them as well. So Yeah. Did that answer your question? Okay. Okay. Good.
Because I'm always shopping around for the best.
Of course. Yeah.
And like you say, practicing, shop around for insurance.
Yeah.
But they do, some insurance companies give you a loyalty credit too.
Yeah.
So it's kind of really help.
Right.
If that affected the credit score.
Yeah, so it doesn't, it's because it's considered soft inquiry, it doesn't affect it. So, but do we have any internet questions before we move on to the next one? Okay, perfect. All right, Mans, payment history, of course, paying your bills on time is always the best bet to go. So if you don't think you're gonna be able to make this month payments, let's say the mortgage is due in a couple weeks and you were out of work for whatever reason, you don't have enough funds to make that mortgage payment, give them a call before it's actually delinquent. Give them a call and say, listen, I'm having financial difficulties. I've been a customer of yours for 10, 15 years. I've been in good standing. Is there any way that we can do a mortgage deferment for this month just because I need to get back on my feet or I need to, my next paycheck to hit for whatever reason. Or let's say, you know what, I know I'm a new customer of yours, but we're experiencing financial difficulties at this time unexpectedly. Can we go ahead and do a different kind of payment for this month and next month that doesn't affect my credit, So let's say, can I pay half this month and then catch up the next month and then still report it as, paid in full for that month? Is that something you're able to do? So it's always important that, of course, first step, pay your bills on time. But if you don't think you can pay it on time, then let's just go ahead and be open. Let's have an open and honest conversation with the creditor and let them know what's going on so that way they can have options for you, okay? And and if you're getting new credit, limit new inquiries. So again, when you are applying for different credit cards, loans, it does take a hit on your credit report. And if it looks like you're applying for multiple things at a time, you might come across as more of a risk of why are you applying for all of these things and what are you looking to do with it, So it might stop lenders or, institutions from lending you money. And have credit cards, but learn to manage them responsibly. Of course, we know, pay that on time, keep credit utilization low. But if it's something you feel like it's something you don't have control over, come and talk to one of us or, give us a call and we can set up an appointment so we can learn how to start a new spending habit, okay? Because spending habits are very, very hard to break. And sometimes you don't even recognize that you have, a bad, a negative spending habits that's negatively impacting your life in the long run, okay? Closing old accounts, closing old account doesn't make it go away. So for example, if you have a Capital One that you want to get rid of because the interest is too high and there's a yearly fee on it, you don't want it anymore. Just because you closed on that Capital One doesn't mean it's going to drop off your credit report right away. It just kind of stays on there. It's going to show that it was closed per your request. It's going to show your payment history still. It's going to stay on that credit report for a few years, okay? So just be mindful of that. And manage the length of credit history. The age of your oldest account and average age of all accounts. So for example, if you're 40, you had a credit card since you were 20, so that's 20 years and it's still in good standing, you still have it, but then you just got a credit card a year ago, so then they're gonna take the average of that, and that's gonna be your average of credit age. Don't apply for unnecessary credit. For example, Macy's have an amazing sale, right? But you can get 35% off. Yeah, you can get 35% off on all your items that day if you apply for this credit card with them or the store credit card. I know Kohl's does it. I know JCPenney does it. They have the people every time you check out. Yeah, that's right. Every time you check out, they always ask you that, right? The interest rate is very, very high, and typically is very high on that on department stores. So if you don't think you're gonna if you don't think that you can manage it, or you don't think it's in your budget to pay these credit cards back, let's not be enticed by it and open these credit cards. So don't apply for unnecessary credit accounts is the goal here. So use caution when opening new credit cards to transfer balances. So if you, for example, you had this Capital One you've been trying to get rid of, it's 21% interest rate, it's $2,000, and next thing you know, you got a Discover offer, a credit card Discover offer that says, you know what, it's 0% for 6 months. Even with a balance transfer, you just have to pay a balance transfer fee, a certain percentage. Let's say you just pay $200 to balance, to transfer your $2,000 credit Capital One balance over to the Discover card. You get 0% for the next 6 months as introductory rate. That sounds like a great idea, but just be mindful. that when you do transfer that, you just know that you have to pay that off within, just do everything you can in your financial power to pay that off within 6 months. Otherwise, then if their introductory rate is at 0 and it ends at 6 months, and then what if it goes up to like 24, 25% or something? So use that as a smart goal to pay off your debt in a specific amount of time. So instead of just transferring it and letting it sit there, and then it accumulates more interest. So that's not the smart way to go. And by all means, just avoid payday lenders. These guys are horrendous. They're illegal in several states, and Minnesota is not one of those states. Their interest rate can go all the way up to 500% interest rate. There's yeah, it's pretty ridiculous. And once you get into one, it's really hard to get out. So payday lenders, if you're not aware, is if you say, I'm really short of money and I don't get paid until Friday and I need $300 just to get me to Friday. And then you go to one of these payday lenders online, and you just put in your checking information, you get $300 right away. And then if you have to pay back, let's say $360 by payday, by this Friday payday. And if you don't have that available, you can always set up a new payment with them and say, you know what, I can do half of at this payday and the next payday, the remainder of the next payday. But the interest rate is really high, where it kind of keeps you kind of stuck in that cycle. And another thing that's really popping up, that's really popular the last couple years, is Klarna. Buy now, pay later. Yeah, one of those options. So as, I don't know, you guys remember back in the day where Kmart or wherever have layaways, where you can pay now, pay certain amounts, or layaway, and you can pick up and pay later. So now it's really easy. Amazon has partnered with Klarna, or there's a few other companies too that allows you to purchase these items now. So satisfy your instant gratification, right? So they're marketing towards that. And then you can pay later, but there's a huge interest rate behind it later too. So a lot of people are getting into that. So you have the traditional payday lenders that are really high in interest rate, charging a lot of interest rate, and you have the buy now, pay later situation that gets a lot of people into a really bad cycle. I mean, once you start one, it seems like it just keeps rolling. You start getting another. You can't afford to pay back this Friday payments with the interest rate, so you get another loan, try to cover that, and then cover until your next payday. So it's something that I see as a very snowball effect with members. So yeah, absolutely. So you see yourself getting to the point where, my goodness, I really think I need to get a payday loan this week. Please contact us, or we can sit down and figure out a way where we can find money for you to survive until Friday. So we can take a look at your budget together. But by all means, just avoid these payday loans or buy now, pay later. And then, of course, student loans is always a big topic right now. So, it's been on forbearance for almost 4 years, and a lot of people are going to have to start paying it back, June or July, whenever it comes up again. So we have to really budget that into your current budget as well. So you have to understand your types of student loans that you have, whether it's federal student loans or private student loans, Parent Plus loans, or the different type of repayment program. And so yeah, understand the repayment options that you have, whether you're on, so when you talk to your lenders, you just have to know what kind of loans you have and what kind of options you have to repay them back, to quickly learn to pay them back. Learn about the Public Service Loan Forgiveness Program. We do have a different presentation on this, and Mayo does participate in this because they're a nonprofit organization. So if someone's have questions more on this, then we can definitely do a presentation pretty soon on it, or they can just call in and we can chit chat about that. Prepare for repayment. It's always going to be a bigger payment loan. So you haven't paid in 4 years, close to 4 years. You think that you're getting just now settled into your new finances, and you think you got everything on the budget, but you're forgetting to add the student loan repayment as part of your budget. Might be a little bit of a surprise for you there. So that's why it's really important to have a budget at this time. So, and then managing your debt. So we're going to talk about good debt versus bad debt. So we have a mortgage that's considered good debt because for the most part, they appreciate, right? So you're going to get some money back on that. Vehicle loans, not really good debt. So because the vehicle depreciates, you're paying interest in that car loan. And investments, it's up and down. It's a good, it's investments. It's up and down. So education, you're investing in your education, so eventually you're going to make more, and I think that it's considered good debt. Credit cards, if you have a good handle on it, it's typically considered as bad debt, but if you have a good handle on it, then it's something we don't worry about. Business debt, depends on, if it's fake business or real business. But if you have a good business plan and, you take a loan out to start your business, it's always considered a good debt. Store credit, not really. So that's considered bad debt because we want to avoid that high interest rate that most department stores offer. Cash advance, always bad. So we want to avoid that. Finally, we're going to talk about retirement and financial planning for the future. You obviously want to pay off debt. So you want to firstly get a hold of your current budget, know that you can pay your current expenses, have money in your savings account, start to pay off your debt, and then we can talk about putting towards retirement and financial planning. And then college savings for yourself if you want to continue your education later on in a year or so. Or, if you have kids, you can start a 529 college plan. Mayo has something like that too, and we have that available here as well. So we can always, so if you have questions about that, we can have you talk to a representative to get that started. Life insurance, always good to have life insurance. So you can have it with your employer or buy it separately as well. Estate planning and trust, always good to have that. And long-term care, because it's very, very expensive to for long-term care. So retirement planning, identify your retirement goals and desired lifestyle. The people at Cetera do a great job of this. They want you to kind of work backwards. What kind of lifestyle do you want to have at this age, or at, when you hit 60, 65, 70, when you retire? What kind of lifestyle do you want, and how much is that going to cost with inflation? And then we're going to work our way backwards and see how much that you need to spend each month to keep up with that lifestyle, and then see how much we need to invest at some point wherever you're at now. Contribute to employer sponsor plans. So this is your 401k and traditional Roth IRA options to look into that. Understand government benefits and start saving for retirement as early as possible. That's always the goal. So for example, if you start at $60 a month at 15 years old, by the time you reach retirement age 65, at 10% annual return compounded monthly, then you only need to pay $60 a month from the time you're 15 to 65 to reach $36,000. But if you invest that at, total investment is at $36,000 in order for you to reach $1 million by 65. You start at 25, you have to pay a little bit more, $160. But if you're at 35, you pay $440 a month to reach $1 million by 65 versus $60 at 15. And then if you're 45 and so on here. So 55, you have to invest like $4,800 each month in order for you to hit $1 million by 65. And keep tabs on your money 24/7. We have so many different options for you to keep tabs on your money. You can go online banking, mobile deposit, where you can just take a picture of your check and then front and back, and you can make a mobile deposit. You can do bill pay, so that way you have complete control of when your money is going out, how much is going out. You can have that automatically, or you can just do it manually each month as well. Digital wallets such as Apple, Google, Samsung, Garmin Pay that you can download on your phone and use that as a scan so they can charge you. Zelle person-to-person transfer, which we have available here. Internal and external transfer, e-statements, so you can take a look at your statements online. You can open accounts and apply for loans online, so we make it really easy for you. Customized alert to monitor certain accounts. And if you think that you might be a victim of scam, or if you think you're in a situation where you might need more alerts or more alert on your credit report, so you can put an alert on your credit report, an alert on your social security number as well. So if you think that someone off the marketplace, like you mentioned, might have access to your information, might be opening accounts under your name, you can always put alerts on your credit reports, all three institutions, and then on your social security number as well, to alert you if someone is if using your social security number for whatever reason, okay? And watching out for scams. Don't let someone scam you out of your hard-earned money. So each $5.8 billion loss in fraud in 2021 is 70% increase from 2020, impacted over 2.8 million consumers. So as we know, scams are everywhere. So, and Stephanie did a great job presenting scams and fraud. So you can always go online to look at that presentation, or you can talk to us about that as well. Common scams, of course, are phishing, gift cards, person-to-person, could arrive via text, email, phone, websites, or other methods as well. It's just, they're very creative. There's a team of people that work on this. They do testing, they test on all sorts of people. They're really creative when it comes to scams. So if you've fallen for a scam, please don't be ashamed of it. Just let us know so we know how to help you get out of it. Just know that it happens to the best of us, and they're just very creative and very, very good at what they do. It's just all they think about. Just like, if all Stephanie think about is preventing scam, these people are thinking about how to scam people. And because we're not in the business of learning how to scam people, it doesn't automatically come to us like that, So don't be ashamed if you're a victim of scam, just let us know. And again, if you have any questions, my name is Soka Yus, and you can reach me on my phone or email address. And do we have any questions online or in here at this time?
Scammers knew that Mayo was giving out that $500 bonus to all the employees.
Oh, gosh.
2 years ago.
Oh, sure.
So those of us that requested the card
Yeah.
fell victim to the scam.
Oh, my goodness.
To use it, zero balance.
Wow.
But Mayo made good on their
Yeah.
deal. It just took another month
Right.
later, but
Yeah. You see how creative they are,
I
right?
found
Yeah.
out from the inside,
Yeah.
inside chatter is Mayo learned its lesson and they're not going to do that again.
Yeah. Oh my gosh.
Or at least not that method anyway.
Right, absolutely. They're just very creative, and unfortunately, and another thing that's pick up a lot the last few years is romance scam, and people get so embarrassed. They're like, "Oh, I should have known better. I did know better. I felt like I knew better, but I still fell for it." Well, there's a whole team, a whole group of people that work specifically just to say the right thing to you at the right time and know exactly what to say. So. And it doesn't have to be, it does, the demographics is all over the place. There's not a specific demographic that is falling for that kind of scam or any kind of scam. We're just all vulnerable to scams. So you find yourself in that situation, please reach out to us too. So, but again, I just want to reiterate when it comes to budgeting, please don't look at it as like something that's restricting your lifestyle. It should be looked at as more of a freedom, so you know exactly when you have savings category, when you're going to have certain things available, and what you have, to spend on certain categories in life. So, but something to really just kind of look at a different point of view, So.
Do you ever refer people over to family service?
Yes.
Consumer counseling?
Yes, absolutely. So for debt management, so sometimes if I can't help them pay off their credit card in a certain amount of time, I refer them to debt management with Family Services. They're a nonprofit organization that can help you with debt management, where they can reach out to the creditors and help negotiate the interest rate to lower it, and then all you do as a consumer is pay Family Services a certain amount, or that debt management a certain amount, and then they disperse it to different companies. But there's also a lot of scams out there with that. So before you commit to a debt management company, you might want to do a lot of research. There's a lot of scams. Or Consumer Credit Counseling is nonprofit as well. But if you're unsure if they're a legitimate company, again, we'll be here to help you out figure if they're a legitimate company or not, and then we can walk you through it. So that's a great question. Anything else? Any questions for you? Yeah.
With mail, there's Certera through credit union,
Right.
plus there's Goldman Financial Engines.
Yeah, so Idaman is more towards with Mayo Clinic directly. So we're with Certera, or Certera is part of our team. Yeah.
Certera, fiduciary.
Yes, that's right. Yeah, Certera Fiduciary. We have some, some amazing representatives out there that can help you out. So at any time, if you need to talk to someone, you can just go to our main building here and, see if you can talk to someone or schedule an appointment. Or you can just go to our website and then you can look them up specifically. So you can email the, the administrative assistant and see if you can get an appointment in with someone. So, yeah.
What is that?
I'm sorry?
What is Certera?
Oh, Certera, yeah, it's an investment company. They're partnered with us here. Do we have any Certera cards available at all? Oh, we do. Okay, so we can get that to you before you head out as well. So.
What do you think about it?
I like them. I use them, you know, and I personally use them, and I refer to a lot of people to use them as well. They're wonderful people that's been with Mayo Credit Union for a very, very long time. And I think it's over 2 decades they've been working with Mayo Credit Union, and they're right here on site, so we get, you know, our members get direct access to them. Right, Stephanie?
One of the things I really appreciate that, so I'm newer to the credit union as an employee, so I started working with them recently over my other financial advisor, because I've learned that they're a fiduciary.
Yep.
Them Cetera or them Ergo?
Them Cetera.
Cetera,
I started
yeah.
working with them because I learned that they're a fiduciary. What that essentially means is that they're required by law to make decisions that are best
Yep.
for me based on my lifestyle and my wants and needs.
Yep,
And so that was something that I really appreciated about, and that's why I actually chose to switch.
yep,
Was because I know that they have to have my best interest at heart. It's not about them, it's about what's best.
that's right.
Would you be with Financial Engines?
I was not. I was with something, but when I switched over here, I really appreciated
Yeah. Thank you, Stephanie. That's a great point.
Do you have any comparison between those two? It's Edelson now, or Edelman?
Yeah, it's Edelman, so that's with Mayo.
Rather than Financial Engines.
At the
Okay.
Yeah, I think it's the same Edelman Financial Engines. But so I wouldn't be the right person to compare that for you. But I think you should talk to a Cetera representative and see what the comparison between Edelman and Cetera. It could be maybe Edelman is more better fit for you and your lifestyle, you know, moving forward, or it could be Cetera is a better fit for you. But it's always good to talk to both sides to compare. We can always give you a card, you know, to Cetera representative so they can talk to you about it. They're not salespeople where they, you know, obviously they want your business, but they're not gonna, if they feel like Edelman is the better fit for you, they'll tell you Edelman is the better fit for you. Go ahead.
Yeah, as we said, the Cetera people here, they're very knowledgeable.
Yeah.
Since we, only created to Mayo employees and their families, they're very knowledgeable in comparing the two and which is best for you with your situation.
Absolutely. Yeah.
We've had presentations here on investing with Cetera people, and there's been questions about financial edge and what's best for you, the pros and cons of each, essentially, and what for you specifically in your needs.
That's what their fees are, both of them.
Absolutely.
But I mean, again, they're not, you know, salespeople where they're not hardcore salespeople where they tell you everything positive about them and the negative stuff about, you know, Financial Engine and stuff. They're there they're like Stephanie said, that they're fiduciary and they're there to look out for your best interests. So it's always, you know, since you're here anyways and you know where our building is at, you're more than welcome to schedule an appointment to talk to one of the representatives. So yeah, those are good questions. Anything online, Seth? No? Anything else in here?
One other question.
Sure, of
You know
course.
how, Minnesota Energy
Uh-huh.
is always promoting this service guard for homeowners if anything breaks down.
Sure.
You know, just, it's kind of like an insurance program.
Okay.
You pay in. And I don't know, I feel like it'd be better just to put money into like a high yield savings account
Mhm.
specifically for when the furnace breaks down rather than
Yeah.
into the service guard program with this, with Minnesota Energy
Right.
that's promoted so much on TV. So.
Yeah, it depends, you know. So if they have different offers along with that promotion that might be better for you, might save you more money in the long run, then by all means it may be a better fit. But if once you determine what their offers are and you determine, you know what, it's not for me, let me just go ahead and put my money in a high yield savings account with MEFCU here, then that's always an option too. And you can always open up a savings account online, or you know, come in here and open up an extra savings account specifically for the category of household expense. You know, it's like if you know furnace, you just put furnace, or you just put household expenses as well. So whatever's easier for you. I'm work with members that has done both. That's, you know, they have money that they buy with that comes with a warranty, or they have categories that they feel more comfortable because they're able to see that they have enough money to fix the furnace if it gets, you know, broken or whatever the situation. Yeah. So it's more for your comfort, actually. Yeah. So okay.
Do you know when you might have just general discussion of the presentation?
Oh yeah, I think we might have a better, yeah. So do you know when the next Cetera presentation will be?
They will be coming up on May 3rd,
Oh, okay. Yeah.
and then on June 1st, if Social Security topic that you're interested in, bringing in a national speaker through Sarah, who actually works with the he speaks. He's been here a couple of times. His name is Mark. He's going to be covering everything you'd ever want to know about social.
June 30th. Oh, yeah.
I don't have the time pinned down yet. It's going to be in the afternoon.
Yeah.
I highly recommend it. Usually when we bring him, we have a couple hundred.
Oh, he's great. Yeah. So just keep an eye out on our website, and then of course we'll send out notifications as well.
Just
So
as you do.
yeah, absolutely. Yeah.
So how do you get the notifications? Because I got it from him,
Okay.
and I had never seen it before, and
Do you have your email notification turned on, or do you get your notifications via physical mail? Yeah, his question was, how does he get the
I
notification?
get a balance statement, that's all I get.
Okay. So my
Plus the little flyer.
yeah.
We can look it up and make sure you get these emails.
Yeah. Absolutely. So that way you can get Yeah, there's always an option for you to turn on the email notification too. So if you call into the, excuse me, our phone center, they can go ahead and update that for you if that is what you're concerned about, that you're not getting a notification. All right, any other questions?